From Kansas State University, this is Agriculture Today. Eric Atkinson with you. And coming up today during his weekly grain market segment, K-State's Dan O'Brien will look back at the market reaction to last Monday's USDA grain stocks report and how those numbers tie into his latest price probability projections for corn and soybeans. And K-State's Glynn Tonsor returns today, this time to comment on the cattle and beef market behavior immediately following that Tyson plant fire in August. He has reviewed all the market-driving factors involved there and says that those shouldn't be ignored as that situation is further investigated. And, of course, awaiting to talk Kansas agricultural weather with us, K-State's Mary Knapp. All this and more next on Agriculture Today. Agricultural producers, landowners, and creditors, you have a partner in your legal and financial needs. Kansas Agricultural Mediation Services offers reliable, trusted information and guidance. Whether you need advice for ag credit concerns or are transitioning your operation to the next owner, Kansas Agricultural Mediation Services can assist you in making sound decisions for your business. To learn more, call 800-321-3276 or visit us online. Glad to have you listening in once again for another Agriculture Today. As for the grain market scene, well, there was quite an unexpected report out of the U.S. Department of Agriculture at the first of the week, the quarterly grain stocks report. And with respect to corn and soybeans, those numbers really put a much-needed jolt in prices. We'll talk about that and other market factors, including the latest price projections from our guest, Dan O'Brien, grain market economist, K-State Research and Extension. The stocks numbers that were posted, Dan, were well below anybody's anticipation.
When the USDA gave their corn stocks and soybean stocks numbers, the estimate of corn stocks on September 1 of just a little over 2 billion bushels was 100 to 200, 300 million bushels below any pre-trade expectations. So that was a shocker in the market. And when that occurred, of course, what we look at is, well, gosh, that must have indicated if we had low stocks that we had tremendous usage. So we went back in and looked at that, calculated the numbers, and in the last three June, July, August quarters, when we had decent livestock feed use, above, say, 650 to near 700 million bushels. Well, this came in at 1 billion bushels. So that algebra basically led folks to say that, gosh, that we weren't sure we had that much livestock feeding going on based on numbers, et cetera. So in the backtracking of figuring out where that number came from, came up with the general understanding or consensus now that the 2018 corn crop numbers were probably too high. And by the time we went in and measured stocks, in commercial and in on-farm storage, here we've got about a 200 to 300 million bushel issue. So the corn crop last year, instead of being 14.4, is probably closer to 14.1 billion bushels. And when you bring that through these balance sheets, then we end up with, instead of 2.4 billion bushels carry out coming out of this old crop marketing year that we just finished, 2018-19 is finished on August 31st, well, we probably had about 2.1 billion. If you run that through those old crop finishing stocks, ending stocks into this marketing year, again, it's just one day from 31st to September 1, and even with the USDA's current projection of about 13.8 billion bushels of corn, you run that through the supply-demand balance sheet, you end up with about 1.8 billion bushels of corn projected for the end of this marketing year next August 31st, and stocks-to-use figure about 12.6 billion bushels. Now, we'll see how the overall perspective on the markets change in the next week's World Ag Supply Demand Estimates report. And in that report, we could see, given it's the crop production NAST side of that also, we could see a change that may come in the size of the 2018 crop as they kind of go back and rebalance that. So what that does, for some good market analysts, well-respected folks whose opinion that are generally well-respected, saying that, again, it doesn't change a lot. in terms of where prices are right now, but what it does, if we do see that 13.8 billion bushel corn crop number with the USDA now has that come down lower, it heightens the responsiveness of the markets, and it probably means that we're in for higher, more volatile responses to any corn price shock that could come along. Mm-hmm. And frankly, there's still a lot of uncertainty about what we'll have for yields, even for acres, as well as production heading off towards the end of harvest of 2018. And a lot of rain, delayed harvest conditions in parts of the Eastern Corn Belt, North Central Corn Belt, and we just have to wait and see. But again, if that 13.8 billion bushel corn crop number now is whittled down to 1, 2, 3, 400 to 500 million bushels, well, then you're getting down to 1.4, 1.5 billion bushels carry out, stocks to use getting closer to 10, and you end up with something closer to 4 to 425, something like that for corn, rather than the current projection by the USDA of about 370. So that's really sort of what's on the table now. It's if we do have any type of cutback from the USDA's current projections on production and supplies, then we'd see stronger corn prices, even stronger than we would have otherwise, given what happened out of that stocks report.
Let's pick up then on the soybean stocks as well, and eventually get to how that affects the possibility of a price hike in a short crop scenario, which you've worked up in your notes as well. What do those soybean stocks numbers tell us?
Well, they came in at 913 million bushels on September 1st. And again, the lowest projection coming into that report was 940 million from the independent analysts that were surveyed. So you end up with an implied usage figure for that June-August quarter of 870 million bushels, which was over 20 million bushels over the top of the most optimistic pre-report estimate. So something outside of the normal bounds happened there on soybeans. Now the USDA, even with that, and it's kind of a little different situation than for the corn, they went back in and they had refigured the size again of also this 2018 soybean crop, and came in at 4.428 billion bushels, down from about 4.544. Again, 120 or so million bushels. But another move that ends up tightening up the ending stocks figures. So now instead of a projection of those old crop ending stocks of just a little over a billion bushels, well, now it's closer to 900. You run that through the balance sheet, you get the projected stocks figure for this year that we're in, which has some problems again with trying to harvest this year's 2019 crop. And when you're aiming to figure out how much we'll have left, August 31st, 2020, well, that's now down to about 550 million bushels or so. So again, another move that ends up and heightens the tension and uncertainty in the crop. And, when you look out into almost any move that would come in and take 200 or 300 million bushels off of the size of this year's soybean crop, which is projected now by the USDA to be 3.6 billion bushels, a little bit more. Well, get down to 3.4, 3.5. You're tightening up stocks to use to the place where instead of 13.6, that's USDA is projecting, well, you're closer to 10. And just looking at how prices respond to that tightening up or how they have in the past, again, 850 seems pretty conservative right now. That the USDA is projecting for the new crop marketing year, it'd be quite conservative if we end up and shave another 2 or 3 or 400 million bushels off the crop, and you're looking at something closer to 930 to 940 in terms of prices. So, and it's not just here in the U.S. that's affected. Again, the U.S. is a major player in the corn and soybean markets. Again, as we shave lower our production numbers and our ending stocks, that affects the world situation. And doing some preliminary analysis of that as well, you've got tightening up in the world markets. And so here in the midst of trade negotiations and all manner of uncertainty in terms of world agriculture here, these USDA domestic changes in the size of these major crops has an impact on the world markets as well. Now, we did see the futures jumped up initially quite a bit and have since kind of moderated. But for the week, corn up about 20 cents, soybeans decent, an upward net move, wheat about the same to a little bit lower. And I guess this is anything but a docile time period for trying to figure out where the grain markets are going.
And before we let you go, Dan, a quick nod to the wheat trade. In that, there was a companion report that came out with these stocks numbers on Monday. The small grains summary, that, of course, would include the read on the winter wheat crop. What of significance to the market did you take away from that?
Really no surprises for the crop that we grow here in Kansas, hard red winter wheat. Those numbers came in a little bit higher. Yes, we understand that. Acreage was low, yields were good. Really no surprises there. The issue that came into play were the extremely wet conditions that have delayed harvest up in the Dakotas, Montana, Minnesota, that whole area. Again, delayed them to the degree that the USDA has indicated they're going to come back and resurvey those same farms again and make a report in the November crop production report, or give updated numbers. So, yeah, we see what the small grain summary report is, but it's almost like, well, we'll put an asterisk on that one. We'll get the final one later. What's at risk is that last, is it 20, is it 30% of the crop out in the field that, again, they were hoping for high protein on, and now very, very unlikely to get it, given the snow and the rain and everything else that's happened on that. So the wheat market hasn't jumped around a lot, but you would wonder about later on, if we're caught tighter on supplies for wheat here in the U.S., that anybody that does have better quality wheat may have some reward from reowning or storing off and down the road. It'll be good, really, actually be very good to get that October 10th crop production WASDE report in hand and see, at least from that governmental perspective, what they're seeing, and then try to balance what we hear in the field with that, and get a better perspective on what price prospects might be.
Well, as a matter of fact, that WASDE report will be out and for full view by the time we talk next week about these markets, so we will recap those numbers at that time. We appreciate the input right here. Dan, thanks, as always.
Thanks, sir. Take care.
He's along with us each Friday to talk grain market trends. Dan O'Brien, grain market economist, K-State Research and Extension. Agriculture Today continues after this break.
Hamburgers, roast, ribs, steak, or whatever you prefer. Beef, it's what's for dinner. Kansas cattle farmers produce 7.5 million head of cattle per year. It takes about 7 tablespoons of peanut butter to get the same amount of protein in 1 serving of lean beef. Support your local Kansas farmers and ranchers. Eat beef. This message was brought to you by the K-State Animal Sciences Leadership Academy participants.
Agriculture Today continues now. There remains a fair amount of commotion over the market responses to the sudden idling of the Tyson beef packing plant at Holcomb in southwest Kansas following that crippling fire there back in August. At issue, the sharp movements in cash-fed cattle prices and wholesale beef prices in the week following the fire and the ensuing shutdown of the Tyson plant, prices that moved in opposite directions. Cash cattle down 5%, wholesale beef up 10%. This unusual turn of events prompted USDA Secretary Sonny Perdue to announce in late August that the USDA's Packers and Stockyards Division would be investigating those beef pricing margins to determine if there was any evidence of price manipulation, collusion, restrictions of competition, or other unfair practices. If such are detected, said the Secretary, the USDA would take quick enforcement action, as that announcement read. Not surprisingly, K-State livestock economist Glynn Tonsor has been on the receiving end of questions from beef producers about all of this. Following yesterday's broadcast, when we talked with Glynn about his latest analysis of country of origin labeling impacts, he remained here afterward to share his observations on the market behavior following the Tyson fire. And here's how that conversation went. So, Glynn, we've had a month since the fire at the Tyson plant, actually a month and a half now. What's been learned about the impact of that fire on the markets?
So there's been lots of emotion and lots of adjustment in the market, and I'm getting that question a lot. The way I've been describing it is most commodity markets, and the beef and cattle are certainly in this bucket, act like a pendulum or a grandfather clock. We have adjustments over time, and eventually we find the sweet spot, In econ jargon, that's equilibrium. We definitely were not in equilibrium the first couple of days after the event. Most of our listeners and watchers of this know that cattle prices were depressed quite hard in the days following the fire, the Holcomb plant we're referring to, and wholesale beef or box beef prices were notably up. Both of those held for several days, but that story has waned over time as well. So we are over time going back to, in econ jargon, the equilibrium we had before the event.
The markets had what many termed a knee-jerk reaction after the fire. What was the impetus behind that?
So there was a lot of uncertainty going into that day of the fire as well as the immediate aftermath. I'll remind most folks that actually the first week of August was a very volatile one in the stock market. And the reason that's relevant was there was a lot of uncertainty in the macroeconomic environment, and beef demand tends to be harmed when we have adverse development in the general economy, and therefore cattle prices get depressed. So we had a little bit of a bearish tone going into the weekend that the fire occurred. And then the fire itself occurred, and there was lots of uncertainty on how much beef was lost, how extensive the damage was, how long the plant will be closed. And we didn't answer those questions, in the hours. It took days and weeks after the event to answer that. So in the era of that uncertainty, the markets don't stop. They go on and respond. And the way they responded, we'll take box beef first, is beef buyers were concerned that there'd be a quote-unquote shortage, or at least a relative shortage of beef. We entered into that event with pretty tight supplies compared to the volume of animals we have in the system. Specifically, the July cold storage report was, I believe, 12% lower than it was the year before. So we were pretty current on beef movement, which is good from a beef demand perspective. But beef buyers, seeing this event, not knowing what it was going to do to the ability to produce more beef, got concerned. So that improves their bidding behavior, if you like, and that pulls up wholesale beef prices. Meanwhile, the packing and processing community is facing the challenge of there's a lot of cattle coming at us that were going to go at this plant. They're market ready. We can't hold them back forever. How are we going to adjust and accommodate that? And to this day, actually, that's been accommodated reasonably well. But that's taken multiple adjustments for that sector to accommodate that. So we've had some cull cow or cull breeding stock plants that have temporarily adjusted to handling steers and heifers. And we've also had several plants that are pushing Saturday processing hours harder. So multiple weeks in a row, we've had higher Saturday total numbers for the country. That's allowed the industry collectively to absorb the hiccup. So that's a really long answer, but there was a lot of adjustments by multiple sectors, and we see that in the price and quantity adjustments that occurred.
And you note that there are basic supply and demand economics at work that were also factored into the spike in wholesale prices.
Very much so, and that's in many ways what I was alluding to here on the demand piece of this. If you have a sector, in this case the packing and processing sector, that's facing uncertainty on how can we accommodate, how much higher cost are we going to have to reroute our labor, find labor to run Saturday shifts and the like, that's going to depress in the near term interest in buying fed cattle. In econ speak, that's decreasing derived demand for fed cattle, and that's the primary pressure we saw. I believe it was 2 limit days in a row when the futures market was trading fed cattle prices, and then therefore feeder cattle prices were down. Meanwhile, the good demand story here was we were current on beef. Remember my comment about low cold storage stocks? Retailers and others would not have had strong bidding support for wholesale beef if it wasn't that they wanted the beef, right? So it takes a good beef demand story to have buying interest by those parties. So there's good demand in this as well. It's not just bad demand in the sense that fed cattle demand declined, and we got to be careful how we talk about it because you have different sectors. Wholesale beef and fed cattle are really two different sectors in this industry, and the prices and quantities, there's no reason they have to go in the same direction all the time.
In as far as the, to put it this way, beef flow following the fire at Tyson, was there a bottleneck, so to speak, in that flow at any point?
I mean, on balance, I would say no. And individual days, you could argue with that. And I certainly don't want to dismiss the effort that's went in to keep us from having a bottleneck. But what I mean by that is market-ready cattle on balance have found a home. We have found a way to process them and keep producing beef from those cattle. We have managed to keep slaughter weights down compared to what they were a year ago, and certainly compared to what they could have been when you lose access to a plant. And that's confirmation we keep moving cattle. If we had an inability to handle these animals that were targeted originally for the Holcomb plant just outside Garden City, we would have expected some increase in dressed weights because cattle are staying in yards longer than planned. That hasn't occurred. So in many ways, I would say, no, we haven't had a bottleneck. But I must also say we probably are at the breaking point, so to speak, on we're using the capacity of the packing sector about as much as you can now. I hope that continues for the rest of the year, but we are pressing our utilization of that capacity pretty hard.
So now, in conclusion, you've had time to digest everything that has occurred after the fire at the Tyson plant. Has this changed the industry in any way?
Well, it certainly has influenced the profitability in the short term for different sectors, and probably the most obvious two sectors are the packing sector and the feedlot sector. Some of our listeners know I try to monitor profitability for Kansas feed yards. In the short term, this was adverse for margins at the feedlot level, so you can't ignore that. And likewise, in the short term, it was good for margins at the packing level. Certainly gross margins improved and most likely net margins with that, although we don't have cost data and so forth to get real precise on net margins. So that's a pretty obvious impact from this. The other thing that's pretty obvious is there's been a political groundswarm within the industry of asking questions about these market developments that I'm trying to clarify what occurred. Not everybody's going to agree with my economic assessment as I've outlined it. There's different opinions on that. There is a USDA investigation that's still underway. I'm not in a position to predict what the outcome of that will be, but those are certainly things that are going to be in the aftermath of this fire.
That's livestock economist Glynn Tonsor of K-State Research and Extension, remarking on the market factors in play following the Tyson beef plant closure back in August. This will likely continue to be part of the give and take when Glynn takes his next turn at our weekly cattle market segment. But chances are this will also be brought up as Glynn will be on the program at a pair of K-State agricultural lenders conferences. Those are coming up next week. One in Garden City on Tuesday the 8th, and the other here in Manhattan on the K-State campus on Wednesday the 9th. These programs are put on annually to provide the Kansas financial community with updates on current agricultural topics. Along with Glynn's beef cattle market outlook for 2020, K-State's Dan O'Brien will provide the same on the grain market side. Also presenting at these conferences, Michael Taylor and Robin Reed on Kansas land values and the 2018 Land Value Book available now. K-State's Greg Eibendahl will then cover the characteristics of top farms in Kansas, based on a new and extensive analysis of Kansas Farm Management Association data that Greg and colleagues conducted. The afternoon part of the program features K-State's David Lehman on creating a sales culture at your bank. And then on the crop insurance front, K-State's Monty Vandeveer will take a closer look at the nuances of the supplemental coverage option. And to conclude the program then, from the Arthur Capper Cooperative Center here at K-State, Brian Brigham on the macroeconomy and the interest rate outlook. You can still squeeze in pre-registration at $125 per person if you take care of this right away today. Otherwise, registration at the door, $140 per person. So again, you agricultural lenders and others involved in the financing of agricultural operations and enterprises, it's a great way to get caught up on a number of contemporary topics of interest to you. The 2019 K-State Agricultural Lenders Conferences. Again, the first of these this coming Tuesday, October the 8th, at the Clarion Inn in Garden City. Then here in Manhattan at the K-State Alumni Center on the campus, Wednesday, October the 9th. Complete registration information can be found at agmanager.info. As always, agmanager.info. Agriculture Today returns shortly.
Did you eat today? Thank a farmer. A way to get more involved in agriculture is through 4-H and FFA. Through 4-H and FFA, we have been given multiple opportunities to grow as leaders and learn more about agriculture.
You can learn skills related to jobs, public speaking skills, and you get the opportunity to travel around the country and meet new people.
If you want more information about getting more involved in 4-H and FFA, visit them on their websites at kansasffa.org and kansas4h.org.
You're tuned in to Agriculture Today, coming to you from the campus of Kansas State University. Eric Atkinson here, and now it's on to today's agricultural news headlines for you, courtesy in part of DTN. The National Corn Growers Association today welcomed an announcement from President Trump earlier this morning directing the Environmental Protection Agency to keep the renewable fuel standard whole. Today's announcement was that EPA will reopen the rulemaking for the 2020 RFS volumes and propose to account for waivers in the volume requirements, allowing the EPA to follow the law and restore integrity to the RFS, according to the association. The NCGA has advocated that the EPA use its available tools to account for the expected waivers in the annual renewable volume obligation rulemaking so that waivers do not reduce the RFS volumes. Now, in addition to this commitment to redistribute the waived gallons, the administration is also proposing to take further steps, including removing additional barriers and supporting infrastructure to help grow demand for higher blends of ethanol. The trade talks between the U.S. and China are expected to resume next week in Washington as the 13th round of negotiations unfolds. It's unclear whether either side is willing to make the concessions necessary for a deal, according to observers. Chinese officials and some media reports are still suggesting a possible interim agreement that President Trump has made clear he does not support, as he favors a comprehensive, enforceable agreement. However, an interim or a small-scale deal centered around China buying more U.S. agricultural products and the U.S. postponing planned tariff increases set for October 15th and December 15th is seen as still being possible if the two sides show some flexibility, according to some reports. Unknown is whether the U.S. will demand more in return for postponing those tariff increases. Natural resource conservation advocates believe continued promotion of conservation practices in agriculture can be fostered through incentives to landowners. Here's more on that from the USDA's Rod Bain.
Incentivizing conservation agriculture has been a concept developing into practical application for some time. So how to further advance an ecosystem marketplace and the potential value and benefits to both producers and the environment?
If you're going to make meaningful contributions to carbon sequestration, water quality, reductions in agriculture use of water conservation measures, soil health, all of those things, you have to incentivize and create the opportunity for that to occur on private lands.
That's Natural Resources Conservation Service Acting Associate Chief Kevin Norton, among those discussing the topic at a recent Farm Foundation forum. He says no matter the conservation model or tools used, producers must understand both economic and environmental value and benefits are measured in the long term.
And it may not be a value that is realized in this year. Some of the conservation benefits starts today, but it accrues over multiple years.
I'm Rod Bain reporting for the U.S. Department of Agriculture in Washington, D.C.
Well, you wheat growers have benefited immensely from advances in wheat seed genetics, and the use of insecticide and fungicide seed treatments serves to maximize the performance of those advanced genetic traits. Mary Marsh has more on this week's Kansas Wheat Scoop. Mary?
Before modern seed treatments, farmers had more issues with the storage and early stages of growth. Today, the seed treatment methods have helped farmers get more from their crops thanks to new innovations and technologies, including fungicide, insecticide, and improvements in microbial activity and nutrient uptake. These advances in seed technology help everyone and in the end can result in higher yields and better grain quality. Good soil moisture and temperature is important, but sometimes diseases can be lurking in the clods and particles. Fungi can cause decreases in yields and can compromise the health of your crop, causing the quality to diminish and resulting in lower prices or even being turned away from the elevator. The effects of fungi can include stunted plants, limited water uptake, head scab, or head blight. In a valiant effort to combat these fungal foes and the potential dangers they impose, fungicides and seed treatments allow seeds to germinate and grow without the farmer having to worry about the fungi attacking from an early stage. There are a few insects farmers really need to nip in the bud. These pests contribute to the spread of some of the worst diseases and viruses for wheat. With insecticides and the treatments, crops can begin to grow without being hindered by pests right out of the chute. Insecticides from the get-go can make or break your crop. Having your seed treated can be a good way to help ensure your crop has the best chances of survival. Seed treatments are not just limited to eliminating the threat of potential fungi or insects, but treatments can also promote and enhance the microbial activity and nutrient uptake by promoting the development of the plant later. Inoculates improve plant growth and soil biodiversity. Certain enzymes and proteins can promote root growth, improve nitrogen efficiency, and improve topsoil conditions. With the improvements and increased rhizobia, the plants will be able to get more of the nutrients available in the soil. With seed treatments, farmers may need fewer fertilizers and soil amendments. Making the initial investment of treated seed can cut back on the need for more inputs, and in turn, cut back on wear and tear on machines, along with fuel, labor, and material costs. Fewer applications means fewer times the soil will be driven over, resulting in less compaction, which promotes good conditions for seeds to emerge. Seed treatments enhance the soil's nutrients. Farmers can make the most out of the power of nature. For more information, visit your local seed dealer. While seed treatments can give your wheat crop a head start, planting certified seed has additional benefits. When a new crop variety is first developed, seed is normally in very short supply. This seed must be increased sufficiently to meet demand. According to the Kansas Crop Improvement Association, when you buy Kansas certified seed to plant in your fields, you can be confident that the seed has high varietal purity, high physical quality, high germination, no noxious weed seed, and maximum yield potential. This is Mary Marsh with Kansas Wheat.
Thanks, Mary. Briefly here, ahead of the break, want to bring to your attention this opportunity. A former executive environmental editor for National Geographic magazine will be speaking here at K-State a week from Monday, October the 14th, about the unique challenges that humans face in a world where the population is growing and the demand for food is greater than ever. Dennis Dimmick worked at Nat Geo for 35 years. He'll present the Henry C. Gardner Global Food Systems Lecture. It'll take place at 7 o'clock at K-State's McCain Auditorium, again a week from Monday, and admission is free. This is Agriculture Today.
While many people know hunger is an issue in developing countries, it is also a problem in our own backyards. In 2010, 1 in 7 Kansans struggled to put adequate food on the table. 2 K-State research and extension programs are tackling this problem. The Family Nutrition Program and Expanded Food and Nutrition Education Program reach thousands of Kansans in more than 70 counties. They learn how to eat healthy with a low budget. For more information about these programs, visit ksre.ksu.edu.
We're back now on this Agriculture Today, and coming your way next, our weekly Kansas Agricultural Weather segment with Mary Knapp along. Mary, as you know, is a climatologist with K-State Research and Extension, and with fresh in hand the official weather numbers for the state for the month of September, now that we've put that behind us, Mary. And it shouldn't shock anybody that it was a warmer than normal September, right?
Right. Statewide, we averaged almost 7 degrees warmer than normal. All the divisions were warmer than normal, from the northwest to the southeast. It turns out that this will be about the second warmest September on record. We're still looking to see how many records we actually broke, but it really wasn't so much the high temperatures, although we did get up to 103 at half a dozen locations out in western Kansas. It was more a case of the low temperatures staying elevated, and that really drove the warmth for the season.
And the persistence of it as well.
It was also a dry month. Southwest Kansas still has abnormally dry to moderate drought. They only saw about 30% of their normal September rainfall, and they'd also been dry in August, so that is beginning to take a toll on the vegetation out there. They have seen a little bit of moisture with this last round of storms through, but when you couple the high temperatures and the strong winds, it's not surprising they're beginning to see the impact of that short-term dryness. Now, if you look at the year-to-date, they are wetter than normal, and even the April through September is at normal, so it's not like it's a prolonged drought, but it still comes at a critical time. We're getting into fall planting, where people are trying to get their canola, their winter wheat, or their cover crops in the ground. So this recent rain has been a welcome relief. Most of the rest of the divisions were running between 65 and 80% of normal. Southeast continued its wet streak. They were 111% of normal, and South Central was 113% of normal. And both of these are areas that would have welcomed a more pronounced dry period. A lot of areas there, the fields are still saturated. The corn has been mature, but it's difficult to get it drying down enough to harvest or to get equipment into the field to harvest. So that has delayed harvest quite a bit in those areas.
Well, closing the book on September, we are obviously now into October, Mary. And the last 24 hours or so, we've had the most definitive signals to date of fall's arrival in the way of cooler temperatures.
Right. We did have a very strong cold front that came in. This was the front that produced the multiple feet of snow in Montana. Northwest Kansas bore the brunt of that. We've seen some temperatures drop into the 33-degree range. I have not yet seen any reports of freezing temperatures, but it has been very cold in that neck of the woods. They were seeing highs in the mid-40s. Now, since we have a lot of the sorghum and soybean that were delayed in planting and have not reached maturity, this is going to be a big problem for those producers in that area. Although it was not a killing freeze, sorghum doesn't like temperatures below 40.
It's grinding to a halt.
Yeah, grinding to a halt. The next week, the temperatures are going to rebound a little bit, but we're looking at lower 70s to upper 60s for the high, which is not going to put a lot of heat units in the bag, if you will, as they're trying to finish off that crop.
It would be worthwhile here to quickly reflect on our average freeze dates around Kansas as you progress from north to south. What would we typically expect?
Typically, in the northwest part of the state, it averages around the 25th of September to the 1st of October, so it won't be a particularly early freeze for them. As you move into the central part, it is a little bit later, around October 10th, and if you move down into the southeast, you're looking more towards a end of October, 1st of November freeze date. And you can find those average freeze dates on our climate webpage, climate.ksu.edu. Another tool that would be worth mentioning is our freeze monitor page on the Mesonet. That's Mesonet, mesonet.ksu.edu. Under the weather menu, there is a link to that freeze monitor. That has the advantage of showing you not only what the coldest temperature was, but you can also track how many hours the temperature dropped below either 32 or 24. So as we go later into the fall season, particularly if you're looking at when that winter wheat may be going into dormancy, those temperatures can help you monitor that.
That really is a cool page, pardon the pun there. It's a terrific resource.
Yeah, it's been in place for a couple of years now, so it is a very handy tool to go in there and check and see when you might have to be looking for damage or how much cold you might have seen on that.
Well, take advantage of that, mesonet.ksu.edu. Looking ahead, expecting moisture to roll back in later today, extending into tomorrow, after which, what will we likely see?
Well, the outlook is for a dry pattern. The 6 to 10 and 8 to 14 day outlooks both call for drier than normal. Again, that won't necessarily mean no rain at all, but less than we would typically see. The October outlook as a whole calls for an increased chance of wetter than normal conditions. And indeed, the experimental 4-week outlook, which would take us towards the end of the month, calls for wetter than normal conditions. So we may get a window of a couple of weeks of drier weather and then end the month with a wetter pattern.
And seasonal temperatures ahead then?
At this point, they are calling for warmer than normal temperatures for October. That doesn't necessarily mean, again, the 100 degrees. Our normal temperatures drop off substantially as you move through October. So a 60-degree day at the beginning of the month may be a little bit on the cool side, but it will be warmer than normal as we end the month.
We appreciate the update as always and bid you a good weekend, Mary. Thanks for coming over.
Thanks, Eric.
Mary Knapp, climatologist, K-State Research and Extension, and likewise a good weekend to you as well. Thanks for tuning in. Eric Atkinson here. This has been Agriculture Today over the K-State Radio Network.